guagedstrategy.com.
Hello, this is Daniel Grady with a quick look at the markets for today, Monday, March 3rd. We have a pretty busy day coming up, starting at 8:45 GMT when we have Italian PMI data. This is followed 5 minutes later by French and then German PMI data 5 minutes after that. And then at 9 o'clock GMT, we have PMI for the entire Eurozone. At 9:30 GMT, we have PMI from the United Kingdom as well. Then at 1:30 GMT, we have personal income, personal spending from the United States. However, last week we already had consumer confidence data, so this is not expected to have all that much of a major impact, although it's an important gauge of the American economy. Also at the same time, we have personal consumption, and finally at 3 o'clock in the afternoon, we have ISM manufacturing index data coming out from the United States, which is probably the most important event of the day, which is also an important gauge of the American economy. Going over to the markets, the S&P 500 on Friday here jumped up higher. It's above 1,859. However, we had some important developments over the weekend, starting on Saturday morning when we had the release of PMI data from China, which showed a slight contraction. It's still above 50, which shows that the Chinese economy is growing, but it's not growing as much as investors would have hoped. And also we have the continuing situation in the Ukraine, which could send some jitters into the markets as well. Going into the session today, also coming up this week, we have the People's National Congress of China, which is expected to debate issues of changing how China works with the markets and provides more market input into the Chinese economy. So that is also providing some expectation in the Asian markets. Asian markets were across the board down during the beginning of the session, probably due to economic concerns of the situation over the weekend. There's increased volatility and there's strengthening in safe haven assets, which is to be expected as investors worry about the possibility of an escalation in the Ukraine. Going into the session today, S&P 500 futures are down by 1.1%, which would take it below 1,850, which is an important psychological level. Going over to the euro, we see here this strong jump with the release of inflation data on Friday from the Eurozone. And during early trading today, the euro has dropped down a couple points, about 20 points from 138, which is our current resistance level, and this would be a retracement from the end of last year. On the downside, we have support at 137.25. The pound on Friday also continued to rise. This is most likely due to arbitrage with the euro. It has support at 166.70 and resistance at 168. The yen increased strength versus the dollar. The yen is a safe haven currency. It's at 101.30 at the moment, which is an important support resistance level. If it were to move below that, we have at 140. 100.40 is our next support level, and above that we have 102.30 as resistance. And finally, we have gold. Gold during early trading in Asia has the price has been going up significantly. It's not reflected here in this chart yet, which tracks gold on the American market. That's to be expected given increased volatility and increased risk. So this would be pushing upwards pressure on gold, particularly the situation in the Ukraine. So we have upwards pressure on gold at the moment. We have support at 1,325, which has been holding pretty well for the last week or so. Above that, we have resistance at 1,350. If it were to break above that, which would be a retracement back to levels from November, this would expose 1,400 as the next resistance above that. And that's it for today. Don't forget to subscribe to get the latest updates, and happy trading.